Hey everybody, good morning. Morning, Eric, Goose, Rex, Donald, Dan, Paul, Robert, Kevin, Francois, Wade, Steven, Rosalind. Rosalind, I finally tried those cakes. So good. Thank you so much. Arturo, Mark, Gayton, Brian, Sarah Lynn. I think that's Anthony. Alan, Michael, Mark, Ted, Amy, Ryan, Joseph, Larry, Maurizio. Welcome everybody. If you want to chat with me like all these fine people saying, hey, good morning, click the button right over here. Be a subscriber on the stream. Got the watermelon monster going today with the green top and the red. So the green screen behind me, like like whoa, JT's clear. Anyway, there you go. So I just finished that up before I got on. Crank it up this morning. People joke, how many monsters do you drink a day? One. I drink one. Drink one every day. Hey, Rungaver's here. Pierre, good to see you. Good to see everybody. And welcome to the stream. So we've got algos, CTAs, computer trading algorithms, versus hedge funds. And that seems to be the big play going on right now in the market. We're seeing algos hitting their sell limits and trying to sell, while we're seeing hedge funds actually buying single stocks, not like baskets. They're buying single stocks, kind of going after, they're doing like it's like a risk unwind, but then targeting certain sectors that have been underperforming. This is kind of like a theory that Goose and I have had for a long time, is that you look at what's outperforming, AI, and then you look at what's been underperforming. And money's going to flow from what's been outperforming, big tech, AI, into what's been underperforming sector-wise. Now, the most underperforming sectors are not going to become the leaders in most cases. Seems to be about 90% of the time that they don't just pop to the top. They pop up kind of in the middle. And we've been looking at this, Goose and I have been talking about this for what, Goose, 2 years now, or a year and a half maybe, as far as the recycling of it. And maybe it's 2 years. So especially end of the year, when we get to the end of the year coming up, gosh, man, it's the end of July. So we've only got like 5 months left. When we get to the end of the year, we look at what sector has been performing the best this year. That sector is highly unlikely to be the best next year. So that's, we see sector rotation like that. Like whatever the performance was this year, unlikely to be the best performing sector next year. Now, whatever the underperforming sector of this year is unlikely to be the most, or is unlikely to be in the bottom next year also. So we see this rotation of money between sectors, and it's an interesting thing. So we're seeing the last week, 2 weeks, as the market's gotten just kind of beat down a little bit, we've seen 7 out of the 10 major sectors being bought by hedge funds. We're seeing the algos kind of fleece the market, if you will. And I can bring over some stuff and show it to you here in a second. Let me try to find the best looking charts here before I share them. Here we go. Right here, you see trading flows, U.S. equities. So when they're positive, long flow is still positive. All right, this is this year through July. Long flow, that's long only type stuff. Short flow. All right, so we're seeing the shorts are just drying up essentially, and we're seeing net flow a little bit here. So it's kind of interesting. And the prime book, net trading flow by U.S. product, right there. Single stocks have been plummeting out, but they're turning up right there at the bottom. That's where we're seeing hedge funds jump into the single stocks. All right. And then macro products, index ETFs have gone to zero. So we were seeing single stocks outperforming through May, and then single stocks stopped. Like the hedge funds started liquidating, and prime book is like hedge funds, PB. So we're seeing that those hedge funds stopped buying and actually started selling single stocks in favor of baskets, ETFs, indexes, that sort of thing. And then now all of a sudden we're getting a little blip, but we can see if you looked for little blips like that, there's little blips like that all over this chart. So it doesn't necessarily, a little whoop, doesn't necessarily make a new trend right there. All right. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, you need to hire and consult a financial advisor. It's not what I'm doing. All right. I'm just not. So don't buy stocks, don't buy options, don't buy bonds, don't buy Forex, don't buy futures, don't buy cryptos, don't buy treasuries, don't long them, don't short them, don't trade them. If you desire personal financial advice, hire and consult a financial advisor. And let's look at this chart. So long only net flows and the zero line up here. Aggregate hedge fund net flows. It's kind of, so they're churning between single stocks and baskets. They've just been churning. They move that money. And money's always got to move to make money, right? So that's kind of the, this LO is long onlys right there. Aggregate long onlys, we're seeing a little bit of fleecing, and we're seeing that just kind of humming along on the aggregate hedge fund net flows. We're not really getting giant inflows, seeing a little bit of outflow, a little bit of inflow, a little bit of outflow. And this is all the way back to January 22 right here. So just looking at this year, right here, right down. So we're seeing a little bit of hedge fund outflow. We're seeing a little bit of that long only net flow. We were getting a big spike and then getting a pullback. So it's interesting. I think it's interesting. So hedge funds versus computerized trading algorithms, which way we're going to go, I don't know. There's a balance in the market, and which way they're going to take us, right? Who's going to win? Now, the CTAs, once they quit being long, they'll flatten out. And a lot of them aren't, while there are some that are programmed to go short, not all of them are. And some of them will just sit it out and wait until conditions meet their criteria again before they go back in. Looking at the economic news for the week, Monday, benign, nothing on Monday. Tuesday, we get some consumer confidence and jolt jobs right here at 10 a.m. after the market opens. Not really much before the market opens. And then on Wednesdays, the big show. Dun, 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 dun. We get 10 o'clock pending home sales, and then 2 o'clock and 2:30 right there. FOMC right there. They're likely. What's funny, Nikki whatever at the Wall Street Journal is already hyping up the fact we're going to do a September rate cut. So the Fed is talking through their Wall Street Journal or Washington Post or whatever it is, whatever. They're talking through their mouthpiece, their media reporter, saying, hey, this is what we think we want to do. Get it out there so it's not shocking to the market. But if they more strongly talk about the rate cut coming up in September, the market might go like this. But then when they do the rate cut in September, the market might do that. So be careful. Be careful planning. I don't think we've hit the end yet. We may rally right up through September, and then that starts the bigger correction. We may make a all-time high into September right there before the election, get the FOMC, and then start flushing that baby out. And it doesn't matter who wins the election, we get a big flush. It's kind of what it's looking like right now. All right. Any questions? Let me know in the chat. Otherwise, let's get her out of here. And then on Thursday, we've got a relatively benign day Thursday after all that news on Wednesday. And Friday, just average hourly earnings. It's a new month, August. Holy guacamole. Already getting into August. It's just crazy. Just crazy. We do have a big big week of earnings here this week. Jump in and grab it. Pull it up, pop it up. Oh, missed the button. Right here. See, we got McDonald's this morning on Semi, Phillips, lots of stuff this morning. Tilray tonight, Not really anything real big tonight. SoFi in the morning, PayPal in the morning, Pfizer, BP. Boy, PayPal's chart looks pretty horrible. Then AMD and Microsoft tomorrow after 30, during 30 minutes of awesome. Meta coming up. So we're getting the rest of almost all the rest of the Mag 7, except for NVIDIA the rest of this week. We're getting Microsoft, Meta, Amazon, Apple. So that's 1, 2, 3, 4. We already had Tesla. We already had Google. So everything but NVIDIA looks like coming up this week for the Mag 7 anyway. And you may be like, what's the Magnificent 7? That's basically the 7 big tech companies that have been carrying us higher. And, they're the last several months, people have been slamming on Tesla, saying it didn't count. And I don't know. You can say what you want to. But we get some energy coming in here later in the week. So this should be, with the FOMC coming out right in the middle on Wednesday, this should be an interesting week. So Thursday, the big movers, Amazon and Apple, possibly Intel and Coinbase. We'll see what happens there. Yeah, we'll see. So if you got any of those that you definitely want me to analyze, Tuesdays at 5 p.m. Eastern, I have a 30 minutes of awesome where you can come request whatever symbol you want, and I'll go through it and give you some analysis. That's what I do every week. Tuesday, 5 p.m. Make sure it's on you. Make sure you subscribe. Make sure you hit the alert with the bell on the notification doodads. And then also put a reminder in your phone so you don't forget. Or make sure you're on my Discord where I can hit you up and say, hey, I'm going live. Anyway. So what's actually moving today? What's popping? What's dropping? What do we expect? Well, let's get into it, shall we? So the S&P potentially finding support last week, but just consolidating here. Not really breaking up, not really breaking down. Higher lows, lower highs, indecision. That's where we left it at the end of last week. Now, look at the S&P 500 futures, ES1 exclamation point, E-minis as they call it. This is how the mainstream media knows what we got going on. We're up, coming into the market. We are up, rallying a little bit, 15 points. Not a major deal. A big, it's funny. 10 years ago, or what was it, 15 years ago, back in like 2012-ish, just off the back of the great financial crisis, a 30-point day on the S&P was huge. And now we said 30-point days, it's like, no big deal. Now 100-point day is a big, huge day. And that's what we got right back here. We did 101 points. Bottom to top, hadn't seen that in a while, but then we took it right back to the bottom. We closed here and then took it right back to the bottom, and so we had a big 101 point just churn right there, and that didn't really set the market up for anything in particular right there. It's just a big churn, and this price action up off the lows, I don't know. It doesn't make me feel good. And look how solid that, look right here. Look at that. Rejection. 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 They're trying to soften it up, but that's a solid rejection right there so far. So bottom line, if we break down below, let's see, what do we get below? There's not a good, the only flip point we really have that indicates we're probably going to go lower is right there. Why do I say it's a flip point? See how this consolidation occurred below that point, and this consolidation all occurred above that point. This is below it, popped up through it with some gusto, came back down, tested it. So that point right there in the chart, if you want to know what the number is, roughly 40 or 54.91. Roughly 54.90, that kind of like zone right there. If we get below that today, we're probably going to make a lower low than we made right back here on, what was that, Wednesday, Thursday, Friday, Thursday and Friday, Thursday, I guess it was Thursday. Golly, last week was like a month's worth of price action in a couple days. So if we get below that right there, probably going down to make a lower low. That's just statistic wise. All right. Just the odds of the market. If we get below there, probably going to make a lower low. How much lower low? Well, go from the low to the high. Could be down to this area right here, 54.19, 5400. That would be my expectation right down there. Let's remove a couple arrows, clean it up a little bit. So right in there. I did expect us to bottom right here when I put this oval on the chart last week before we got down here. And look where we kind of started bottoming, right in that vicinity. So if we get below that low, or that flip point, excuse me, then probably going to make a new lower low than what we did on Thursday. If we can break out, and this is going to take a little bit of effort here. We're going to have to get all the way up above this high right here. That high starts tipping the odds at this point. Now that we've come down all the way down here, this high right here is important. If we get above that, we've probably tipped the odds we're going on higher. And last week I was saying 55.50, and I still think 55.50 if we get above that level, which is right in there. Right in there, that 55.50 area, which is right where this is, right there. We get above that, we're probably going to go on up, test this, and break on through and go higher. Probably. Kind of starts invalidating further continuation of the downside once we break up through that. All right. Any questions, let me know in the chat. I'll do my best to go back through it. So right there. All right. And in Q, if you got into the SVXY trade, you should be able to figure out your own target. It's pretty clear. And in Q, bouncing off of the 30-minute, finding resistance there. Be careful. This has a potential 5 down structure. When we look at the daily, that probably shows up on the 4-hour also a little more clear. Yeah. Look, 1, 2, 3, 4, 5 down. So this makes this level right in here very, very important right here. If we hold here, if we move up here in a 3-wave type fashion, hold here and start down again, not good. Not good. Probably going to get a move down in this area right in here. Maybe as far down as 17,000. Yeah, 18,000, probably a lock. 17,000 maybe. So if we hold that 20,000 to 20,500 area, if we kind of bounce up in that area and hold it and start down again, probably coming right down here. Probably. That's why this is right here, because if we bounce there, we're probably coming down here. All right. RTY. It is clear. It's absolutely clear. I will address that right now. Look, right here. It is absolutely clear. What would you target? This is the roadmap line pattern. Simple as that. What's the target? High to low? Right there. It's clear as a freaking bell. If you don't know the pattern, shouldn't take that trade. Don't be a smart aleck. CL. Right here. Don't trade trades you don't understand. This is a potential measured bounce. Right here. 1, 2. Possible 3. That could push us right up into this 97 area. Possibly even up to 105. Watch out for an explosive breakout through the roadmap line on oil. GC. Looking for that to retrace back to the roadmap line if we keep holding those lower highs. Now this could break out and go, but keep holding lower highs. Something to watch out for right there. If we break through it, could tip the odds we're going higher. We keep holding lower. Watch out for going lower. BTC USD finally pushing on up. Target on that one is pretty clear. I'll just go to a cleaner chart, cleaner version. This high, this low. Let's flip back to the daily chart. Target right now, fairly clear, 77,000. 80 above that, 89 above that. Same pattern all the time. Basically, this is the pattern I look for. Break above the 618. Looking for that. ETH, USD has not broken out yet. Still did a return to the roadmap line. Looking at a cleaner version. We did not break above the 618 like we have on Bitcoin. Right there, we did not. So that's still the resistance right in there. We have not broken lower, not broken out higher. If and when we do break above that 618, that high, this low, which is just marginally lower than that low, right there is the target, 4,300. Dun, 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 dun. Free trades are not supported. Like when I just throw out a trade in the trade room, those are not part of a system. They're not really supported, but you should understand the trade before you take it. Just ideas. I've talked about that ad nauseum on this channel, what the expectation for that SVXY trade is. It doesn't happen very often. DXY probably going to churn a little bit, and it is headed down, more than likely. It has the opportunity to break higher. This is some unclear price action, but probably heading lower. Stuff that was gaining, MSTR. Got a lot of stuff drawn on this chart. A lot of stuff. Let's just clear it up. It's fairly clear at this point what we're going to do. Even though it didn't touch the roadmap line, probably heading on up to 21, possibly 23, possibly 3,000 right there. I wouldn't expect a lot more than this zone right here. Although it can keep going. If Bitcoin breaks out, that's going to rip. And FNGU probably coming on down. It did come up just shy of the roadmap line. It can bounce here. May or may not. It's been since April since we hit. Last big full test was back here. Can come up shy and go again easily enough. Coin set the breakout. This one looks like it's clearer on the Connell chart, the leverage long. Sometimes leverage provides a more clear picture, sometimes not. But we have resistance right here on the leveraged chart right there. It's going to have to break above that to get out to the targets up here. Same pattern, roadmap line pattern. That low goes right there. That high, that low, highest high, lowest low. Bounce it off the roadmap line. Another bounce, break through. Target 98, 109, possibly 145. Same pattern every time. So coin, going back to it up here, didn't actually hit the roadmap line, but maybe heading on out to 300, 311, possibly the top of the box up here, 353. If we can get through that, we've set up the bigger picture, much, much bigger picture, time frame, pattern. Doesn't have the roadmap line because it hadn't been a public company, but since April 21. 530, 670 right there. 530, 670. We've already set the odds. We're pushing through that 618. Setting it up to go. It could be even bigger. Could be. But let's keep it in check here. Not what I tried to do. So right there you go. There's that 618 from back here. Probably pushing up in here, which puts us above the 618. Back over here. That's why I said we get up to that. Tip the odds, we're going on up. Up to there. So to nest it up, potential pattern. First thing first, just getting up through 300. INSP. Go back to the current price section. Looks like, even though we're popping up today, we're probably going down. Target right down here, 111. Meta, trying to bounce off the roadmap line. Beautiful hit. Beautiful hit. If we can hold. If we can hold it, we do have earnings coming up on Wednesday. That looks likely to pop up to 560, 575, 600. Possibly break down. On semi. Popping up, just churning at this point. Not really indicating. I mean, there's the upside target. There's the downside target. We're just hanging out in the middle. Nothing high probability at all. MSFT, Microsoft. Potentially bouncing off this zone. Didn't actually touch. It's the chance that we go touch on the earnings. It could be a dip and rip. Could just be a rip. Maybe that was close enough. Could have just been a 4-hour bounce. Go ripping up to 475 at this point. But we could come down and fully touch the daily. We could. L. Loez. Right up to the target. Boom. Bounce. Target. That was the same. Yeah. That was it. I expect to retrace off that RV. TY. Revity. God, what a chop fest. Nothing clear right up there. It's going to take more price action to the upside, a retrace, and something more clear, because this was not clear for me. This big chop and this pop, that can be a 1, 2, 3 wave move, and then it can correct that right back down to a lower low. That's why this is not clear for me. That was not any kind of bullish price action. So that choppiness. So 1, 2, 3. Watch out for a rejection of this. And that high to that low. See where the 618 hits? Right there. So we pop right up there, turn down. You can get this whole move again repeated off of this right down there. Dangerous chart. Connell, like I said, that kind of indicates we might break out and go, but it hasn't broken out. Ain't it? Probably going to continue consolidating back toward the roadmap line, although this is kind of an echo of a prior move. Kind of. And this retrace here. Very similar in size. Little bigger. Not as big as this one. That one would probably put it back to the roadmap line. So that could be an echo right there, and we could get the same reaction out of it. Up to 400. Let's see, that's 4-hour hit. Yep. Right there. 387, 400 area. Tesla on the list right there. That might have been it. I had the 4 right there. Right there. 3, 4. Target for 5 is up here around 320. Be careful, Rungamer. Nail. Going for the target. It's just a matter of time. Right up here. Right up there. Just redraw it. In case it's not clear. That high. That low. Right there's the target. There you go. SOXX potentially bouncing if we break back above the 618, 274. CRWD. Ugh, probably going on lower. Not too good on that one. Not my favorite right there. TXN. That's also looking like we might be topping out. I swear I've replaced it. Like having this up on like 4 different computers, I think it keeps reloading some of the old chart patterns. But that one right there, look how long it consolidated. We're coming up right into the resistance 212. That extension, and it may result in a bigger retrace back down in here. DPST, right to the target. Wouldn't expect much more for now without a retrace. EMAT, right to the roadmap line. If we can bounce, break back above the 232, 265. SMH, probably coming on down. USD, probably coming on down. Those are semiconductors. NVIDIA may give it up a little bit more. MCD, disappointing on earnings. Missing on the top, missing on the bottom, and rallying. There you go. This looks like a consolidation before we do another flush. Still expecting this to come down to 232 area. If we don't, I'll be kind of disappointed. We may, in fact, rally up to here before we do that final move. So if we do an upside down roadmap bounce, possibly put it right down there on the extension. Rally up, break down through the 618, extensions right there. PHG. Man, nothing to see here. Wow. That high, that low. Man, look at all these splits in here. What the heck was that? Talking about some weird splits. That one's got resistance right where it is. If it turns down, it can go down on another leg. Another leg puts that almost to 0, so don't like it at all. QCOM, trying to bounce off the roadmap line, get back above this right here. We can go on those new highs. Lots of these charts supporting this same price action. That kind of fits with that narrative too, that we may rally through September to new highs. Lots of these charts looking like that, so cautious on that. We could hit those new highs and then flush it in September when we do the rate cuts. So watch out for an explosive move tomorrow. CVNA, right back here, probably needs to retrace. We haven't been down there since November. They can only go up so long before they get some wind knocked out of them. LABU. That's a 3X in a biotech right there. Be careful. It's a leverage on top of biotech and sitting at the resistance that can turn down, get another leg, just like this one right here. This leg right here can be repeated right off of here. Go right down to 67. But on the flip side, the upside, possibly 200, 220. Is it clear? Absolutely not. Would I get involved in this? Not with leverage and biotech. That's 2 out of the 4 things that don't always follow patterns. The other 2 being China stuff and low price stuff under $10. That's stocks, not cryptos or anything like that. The stocks under 10 bucks don't always follow patterns. TECL, that's a 3X on technology. That can indicate we're about to bounce in a big way right there. Could take technology back up to 120, 125, possibly 144 on extension. CMT, looks like it wants to come on down just a little bit. Could it bounce here? Possibly. Could be a 4-hour bounce. Daily bounce needs a little bit more. AKAM. Coming up under the roadmap line. We did do a potential measure bounce. But when you zoom out and look at this thing, that was a massive retrace. If we can break through the roadmap line, tips the odds we're going higher. Possibly up here at 220, 240. If we don't, and this is a measured bounce, so it's not like the reason these targets are so crazy high, because it's a measured bounce. We popped up, we retraced to a 618, held, turning back higher. We have to break through and prove that we're going higher to get these targets. This is not like this week, next month. This is probably like late 25, 26 if we're going to break out. Head up here. If we reject, if we turn down, watch out for a lower low, lower low. Now, the reason I have that is because when you look at this on over here, it looks like a big 1, 2, 3, 4, 5 up into that high, and it may retrace this in a bigger way. Oh, pulling the wrong one. Could come all the way down here in the 50, 60 area. Which low is the important low? That's always what you got to watch out for. SPXL. This could be done, but it could retrace deeper. It's a leverage on the S&P. We did hit on the 4-hour, and we can hold there and launch off of here. 1, 2, 3 down into the roadmap line. Thing to watch. This is why I'm not sure which path we're gonna have which way we're gonna go with this thing. That high, that low, right there, 618, where we kind of spent 3 days on the way down. Break up through that, probably going up. New highs on SPXL. GOGL, Google. Came up just shy of hitting right there. Just shy. May get a little more flush, especially if Microsoft or Apple reports kind of crap earnings or misses a little bit, gets a little flush. We may see this come on down in sympathy. Remember, they reported good earnings. They beat on the top, beat on the bottom, but still got pummeled right down here. SOXL potentially showing a potential for a bounce in semiconductors. Although SMH and SOXX, SOXX hit. So, be careful. Oh, USD is the other one. USD didn't quite hit. So. GM is consolidating right there, or GE, excuse me, GE consolidating right there under that resistance zone. That zone comes from these highs way back over here. We kind of topped out and then popped it and then wet the bed and fell out. So we're back up into that zone. Watch for resistance. Now that this thing on a speculatively, move back there, I set this target right up here at 190. We may go hit it. That was based on some of the proportions back here. Watch out for that top right there. If we can break out, retrace, and set some higher targets, but right now, I wouldn't expect a lot of extension. TSM, coming on down right there. Request show is tomorrow. TSM right there. AZN right there. This is kind of like coin flip. Does it extend or does it retrace? So we came up, we hit the target, retrace to the breakout. Do we bounce on up to the next target, 88, or do we break down and come back to the roadmap line or lower? Unclear. BABA, baba. Ooh, man. If this one can break out and go China stuff, be careful. I'd love to see that get above the 618, go for extensions, 93, 96, and it has a bigger potential pattern cooking here. Could take us way up here, 200. And the other one I like, but is not getting there yet. Baidu right here, just messing around down here. Had not been able to break above the roadmap line. Keeps getting these extensions lower. Bounce, lower, bounce. Hadn't gone lower yet, but TOL, well, that bounced right up. And targets, watch out for retrace. Book your profits if you got them, or at least protect them. Right in the target. That high, that low, right there at the target. I don't expect much more. ESGR, looking for stuff on the droppers list, looking for things that might be opportunities today. Instar, nothing. Probably going to retrace back down lower. IART, ooh, man, that looks pretty gnarly. Pretty gnarly. Might go lower, 21.20. ABT, rejected off the roadmap line. Couldn't hold it. May go lower, 98, 97. Possibly down to 95. FLUT, rejection, rejection. That one made a lower low, missed the target. It might, that was a lower high. Watch, it might go down lower into the target zone. Be careful. NAMS, that's a pharmaceutical, biotech. Be careful. Anything the FDA is involved in for the United States Food and Drug Administration, that's counts as biotech to me. And you can argue any you want. I just don't get involved in stuff that the Food and Drug Administration gets involved in. So watch out for that flush until it can break out. SNDX, back to the roadmap line. Rejected the prior highs. Didn't get any kind of extension. And that's a solid resistance right there. Same stuff all the time. Cold. Looking for the bounce right there. Extension. Wow. What we got going on? Sitting on the road. Sitting on the road. No, sitting on the 618 retrace. Potential for a measured bounce. This could explosively move higher. Be careful. On natural gas. Cold though. Inverse natural gas. May get an extension. 100. WINT. Wow. Dumpster fire. What makes that a dumpster fire? Look at that. No price action above the roadmap line for years. Reverse splits. It's literally a dumpster fire of a chart, dumpster fire of a company, probably going toward zero. If the longer you hold it, the worse position you're in. That's why it's a dumpster fire right there. Dumpster fire. Dun, 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 dun. I do request Tuesday, 5 p.m. Eastern time. I'll do a request show. NTES, that looks like it come on down to the target. ARM. Dun, 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 dun. How do they stay in business that long? Investors, baby. Investors. People funding those biotechs. ARM, watch out for the flush. We're below the little baby head and shoulders there. That can get a bigger flush down to the roadmap line. If we don't hold that, it's probably going to take this whole big gap back down. At least back down there. Probably. Doesn't have to, but probably. PDD. Sit on the roadmap line. Can't get off the mat. That high, that low at this point. Break above that. 170. But we might be looking for the end of this move. And watch out, it could go deeper back down in the 100 area, if not deeper. And PDD, I think, is Temu. If I got that right. I think they run Temu. Yeah, they're not going to claim it on here. So watch out right there. Watch out for the breakdown is what I'm saying. Like I say watch out a lot because, hey, 80% of stuff's not clear. You know, several of these I was like, ooh, and there's opportunity for that, opportunity for that. So only like 20%, maybe even 10% of stuff is ready to do something awesome. TSLO, hit an alert. Yeah, look at that beautiful potential right there. Beautiful potential right there. I have shares of TSLL. Oh yeah, come on. Let's get her at her. Alrighty. Bias for the day. Wrap this baby up. go get into something else. And watch out for the break above that 618. If we get above it, sets the stage, new highs. If we just consolidate in here, so this will be interesting too. We may just kind of fart around here through Wednesday, 2 p.m. FOMC before we can break out or break down. May just kind of mess around in here. I'm kind of thinking that the correction may be done, and we're maybe gearing up to break up higher and rally up till September. Whereas we might break down in September when they actually do a rate cut. Be careful. Be careful. Moving forward. Nothing's clear. And the treacherous spot. Now, if we break below the low, as I said on ES over here, the warning sign is that level right in there. I jumped that back down the time frames here. The warning zone is right down here. 54.90. We get below that, we're probably going to make a low lower than what we made right back over here. Now, why don't I use the S&P chart? Because look, that looks nothing like it, right? So we don't have all that consolidation that we had on ES. ES is more clear to me. That's why I'm using it as my indicator. That's why I watch it every day. Right here, we get more price action. We don't get all the gappy stuff that we have on the cash index. See these big gaps? We gapped up, we gapped down, gapped up today. We don't get that on the futures chart. It's all very, very filled in and clear. We do have a gap over here, but for me, ES is a much more clear chart. We're going to go fill that gap sooner or later, probably before we drop, if we're going to drop further. ES doesn't like to leave gaps at all, so tends to go fill them. All right. Have a great day, everybody. Hope you heard something that you liked. If you did, give me a thumbs up on the video. Make sure you're liked. Make sure you're subscribed. Make sure you hit the bell with notifications so you get notified when I go live tomorrow, 9:15, same bat time, same bat channel. I'll see you. We'll look for more stuff moving